The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. In the words of our greatest catcher ever to play baseball, in my opinion, maybe Johnny Bench, but I would have to say Yogi Berra of the New York Yankees because he had so many championship rings and so many records. One of his favorite quotes was, "You gots to take the girl to the dance, and that's the one you dance with." Well, that's what we're doing in pattern recognition today, boys and girls. We are looking at a situation where we have the market rallying coming off of that big down week that we had. We've rallied up to the 786 retracement to the New York Stock in the Dow Jones, Nasdaq, and S&P 500. We have not made the 618 retracement yet in the New York Stock Exchange Index, but the only people that watch that are me and Methuselah, and he's not trading anymore, so we'll see. The first chart that I posted in here to Tiger TV today comes from our good friend Norm Winsky from Astro Trends. He's brought this to his folks' attention that this pattern is very reminiscent of a pattern that is getting ready to fail. Now, we did get up to the 786 retracement last night in that S&P futures. I don't know if the cash is going to make it because we've sold off a little bit, so far. But this is it. We've had the 3-day rally. The key Astro date was the 17th or 18th, and this is the 19th. So this has only got about a 1-day orb on it. So if it doesn't start down now, this thing's going to fail. And fail badly, and we're going to probably go up a lot higher. So that's the main thing that we're looking at. I posted this chart. Hope the charts are posting into the room because I put them in. I tried for well over an hour yesterday to do the charts with the live charting thing through Hotcom, and I'm just not able to do it. Whenever I try to get there, it just doesn't quite make it. We've got a lot of things happening here, folks. Yesterday, we were bringing this to your attention too, and that was the Japanese yen versus the U.S. dollar. We went up and we hit the exact 786 of the whole move to the exact tick at 123.77. It didn't go a penny above it. We backed off about 60 or 70 pips from that level so far. So that's another one that hit spot on yesterday. So we want to keep an eye on that. But there's another one that's really important they're all important. But this next one, I think, is something we've had on our watch list for quite some time. And it might explain a few things. I'm not sure yet, but we'll have to wait and see. I'll get into that in a minute. But we're going to take a look here at copper. And as you can see, since the middle of August, when we had that August 24th meltdown in stocks, copper rallied from 220. It rallied 10% up to 225, 250 per pound, and then we've dropped down 20% down to the actually 40%. No, it's 20%. Let's try it that way. 20% down to the $2.07 per pound level, which is the 1.618 expansion of that move. It's also an ABCD, and it's also a butterfly pattern coming in here on copper on the daily. So this is the area where I certainly wouldn't want to be short a whole lot of copper in here, and I'm looking at potential long side in copper. Now, if we go a little bit farther out in copper and go over the last 8 or 9 years, I'm going to bring this chart up so you can take a look at it. We've seen it before, but all I've done now is I've taken it and I've placed the retracement levels in. As you can see from the low, when we had in copper at $1.35 a pound, that was in the fall of 2008. The market then rallied to 465 a pound. It tripled in price. And as you can see, if you look at this chart closely, you'll see that at that time it made a 3-drive to a top pattern up there at 465. And then since that time, it's dropped about 60% in value. And actually a little bit more, it's about 78.6% in value, because you can see that the 78% retracement of the whole move from 2008 to the high in 2011 to the low that we just hit this morning comes in at 206. And the low so far in copper today has been 205.70. Now, I don't know if it's going to be that exact or not, but this is the time where you want to start, looking for a place to possibly buy copper. And the other thing that, hold on one second, folks. The thing that's important here is if you look at the divergence here that we have between the blue line, which is the S&P 500, and the copper, which is the one that's been going, down, circling around the porcelain bowl, is really an amazing correlation, because this copper is supposed to have a PhD in economics. And here's something that really might explain everything that might make this market just go higher. What is it if this is the bottom in copper and the bottom in some of these commodities that we're looking at, and the economies of these other countries are starting to improve? The charts of these other countries, like the emerging markets and China and Japan, those charts are not telling us that. But maybe this is the bottom in commodities. I don't know, but this is something that we might want to consider, because the correlation here has been a divergence that like nothing we've ever seen. I know the 4 years that this is happening are the 4 years of quantitative easing, and that might describe it, but that's something that we should pay attention of. If you'll remember, when we were bottoming on August the 24th in the stock market, there was one thing that was there that was very important, and that was that the low that we hit in the New York Stock Exchange Index that day was an exact 1.27 of that previous low that we had in 2014. It came, right to the exact penny, and of course we've had a 61% rally in that now, as we've seen many times from that long-term chart that we've looked at in the New York Stock Exchange Index. So this is something you really want to pay attention to, is copper in this area, because it's got some really, and below 203, then this would totally be wrong. But from this level right where we're looking at right now, you have to pay attention in copper, because it's got a chance. It's a slim chance, but it's got a chance. And the pattern is there. The numbers are there. I mean, it's got everything that you could possibly look at. The fact that we've had this massive divergence for 4 years, I don't know why that's happened, but it's happened. So maybe it's different this time. I'm not sure, but at least that's what it's looking at. Now, we also will want to take a look at one other one that has been on our watch list, and has been on the CNBC again this morning, and also on Bloomberg, because we just made new lows from yesterday. In the crude oil again, one more time, we went below that $40 per barrel level, and we could start accelerating to the downside, but the time and price parameters coming in on crude oil says that this is a place where it should hold, and we should get a pretty good rally, and the rally could easily be a 15% move up into the $45 per barrel level. There's no question long term that oil looks incredibly bearish, but shorter term, it is very oversold, and it is due for a bounce. And we do have some strong time and price levels coming in right at this level that we're looking at today, but there's been no bounce. So yesterday we hit 39.90. Today we hit 39.87. as a low. We made a lower low by just a few pips so far. I mean, it still could go a lot lower, and it was not able to rally very much. It rallied about $1 a barrel is all. So there's no big move coming out of this. So that's telling you that the bottom is not in, and that's why you're looking, for probing for it, because this thing has been in such a bear market, because we hit $140 a barrel back in 07 and 08, and it was a big move to the downside. So we want to keep an eye on what this might be doing. There's another one that there's just so many things happening today with that yen and all the other things, and even bonds are moving pretty good. But the one that one of my favorite things to look at, and since we've got just a few minutes here, we'll cover this into the break here, and that is the euro versus the U.S. dollar. Now, unfortunately, a lot of these things don't happen except in the middle of the night, and unless you're doing something all night long, which I don't suggest people do. But if you'll notice, the euro here has been in a massive downtrend. We've looked at this, and it's still going lower, folks. All we're seeing now is another 3-day rally, just like we had between the 10th and the 13th of November. We're having one between the 18th and the 21st, probably. So, or tomorrow, which would be Friday. So there's a lot of resistance coming in on the euro up at 107.60. We're trading at, I think, 107.20 right now. That completes a really nice ABCD pattern in the euro. And as you can see, the bottom that was made was nothing more than a big ABCD pattern from the 12th of November down into the 17th. So this is all we're seeing is a snapback rally, and that's it. Now, I've had several questions about gold and silver. When do you start accumulating them? I believe you buy silver. You should have silver rounds in your portfolio. In other words, 1 ounce silver coins printed by the U.S. Mint, because they're really good legal tender, and I believe everybody should own some of those. We live in interesting times, as the old Chinese curse says. So gold's a little different story, because if gold fails at the 1030 level per ounce, we're going to be looking at triple-digit moves in the gold. It would be my opinion. Longer term, I'm sure it's going to be good, but remember, there's been some tremendous moves in gold, over the years. I have to relay a story to you. Hopefully, we can finish it before the break. Is when I was at Drexel Burnham during the mid 70s. I started in 76. I finished in 82, and we were in Beverly Hills, and I was in charge of the commodity department. I'm going to have to finish this after the break, but it's an interesting story because it tells you the speculative nature of some of these markets, and how you should be protected against being able to do certain things. I'll finish that story when we get into the break, but it's not time to buy gold and silver yet, in my opinion, from a standpoint. For silver on investment, I like that. So we'll basically look at that. Okay, we got to go up to the 5th floor. Cell number 6 with Billy Ray Valentine. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, Larry Pesavento for TFNN. We're going to talk a little bit here about the gold market. I posted a chart in here showing the work of Larry Edelson. It was a neural network that I received around the 6th or 7th of November, and it's showing you that towards the end of November, and we're not too far away, folks, we're only about 12 days away, he's looking for a pretty good low in the gold market. Now, that could be a really good spot because it looks like, and I can't see the exact date, but it's in the 4th week of November, so we want to be watching that. Now, I'm not going to use this as my entry. I will use the patterns as my entry point, but you have to respect this model because it's been spot on. So we want to watch that and use every tool that you can because these markets are rather tricky at times. So you want to be able to get in and try to do the best that you can with the timing. So we'll use that a little bit. But I wanted to go and I want to tell you folks a story because when I was at Drexel, we didn't have we had very few walk-in customers. We didn't take them because we just didn't want to, because most people that trade when they start out, about 85% of the people lose. The people that stick with it 4 or 5 years, they'll turn around and be profitable. But most people, when they start out the first year, it's pretty tough to make any money. Well, the a wife of the director of Drexel that hired me was a movie star, and Suzanne Plachette, and her best friend was a woman named Myrna Dashoff. Myrna made a real career out of marrying well. She was married 3 times, I believe, and they came into the office and they wanted to open an account for her to trade gold. This was in '79, and of course gold topped in January of 1980. And I wouldn't open the account. And my boss, of course, I got a little bit of heat. And why wouldn't you open the account? I said, she's not qualified. I mean, she's only got $100,000 liquid assets. She's got a $300,000 condo, and she's got a couple insurance policies, but she's not really, shouldn't be trading gold. And so I didn't open the account. So what she did, she went across the street to Dean Witter there on Rodeo and Wilshire, and she opened an account there with the broker, a lady broker. I forget, she had a nickname that was really, she was ruthless though. She was only interested in commissions. And about 2 weeks later, Miss Dashoff came into my office showing me her statements, and she had taken the $25,000 up to about $75,000, and she basically told me I didn't know what I was doing. About a month later, she came in and she showed me another statement where the $75,000 was now $220,000. And again, she said, I don't know how an idiot like you could even stay in this business. And of course, I have to put up with it because it's my friend, my boss's wife, best friend. So I just shut up and didn't say anything. Gold top, January 8th. January 8th of 1980 January 20th of 1980, January 20th of 1980 at $865 an ounce. On February the 20th, I got a notice from Bob, my boss. He called me and he said, we got a problem in the family. And I said, what's that? And he said, well, Myrna has been speculating in gold. She's in big trouble. And I said, how much big trouble? Well, she's got a minus balance of $288,000 it showed Dean Witter. And I said, oh, well, that's interesting. And I said, how is she doing? He said, well, she's near suicide. She's on a suicide watch. And I said, Bob, remember I wouldn't open that account? And he said, yeah. And I said, you're the one that taught me about Rule 403, know thy customer. And I said, yes. And he said, yes. And I said, well, she can get all of her money back. And how do you do that? And I said, well, she was not qualified to trade commodities. And they were, she was trading 10 and 20 gold when she didn't have any idea of what she was doing. She was a neophyte trader and knew nothing about it. Well, she ended up getting one of Drexel's attorneys, told her to go see one of the other attorneys there in Beverly Hills. They approached Dean Witter, and Dean Witter wrote off the debt of the 200 and some, I think it was 287,000 as I remember, and they gave her the $25,000 back. And you know what? I never heard a word from her. So at least she got her money back. I never knew what happened to her after that, but that was the extent of, and that doesn't happen as much anymore because people are more selective on how they do this. But there's still some horror stories that are out there. That's the main thing to understand, that's what it is. But that's why you have to have a real respect for margin and stuff, folks, because you can get into a lot of problems with over margining. Okay, we're gonna take a little break here. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to take a look at the IBB, the Investors Business. Whoa, lighten up here. I'm sorry to laugh about that, but it is the biotech index. IBD is Investors Business Daily. That brought back a lot of memories because Bill O'Neill, the owner of that, his son was my daughter's very first date when she was 13, her first dance. And I know the O'Neill family, a very nice group of people, but he's a very nice fellow. Anyway, the biotech index is the one that really started the move on Monday. As you can see from the chart, it stopped exactly at the 61% retracement down at that 306, 307 level. And we've had a really strong rally into that time. And we have not even come close to taking out the high of September 17th. So it's still in a downtrend, but we're probably getting ready to take out the highs of November 3rd. Would be my guess, with based on some of these. That does not detract away from the island reversal pattern. In fact, what this would be doing on a longer-term chart, if we looked at it on a weekly, you'd be making a beautiful head and shoulders pattern with the right shoulder. The ones forming now would be at a lot lower level than the left shoulder, which would make it a very bearish head and shoulders reversal pattern. So that's one that we want to keep looking at what we're looking at here. Now we need to take a look across the pond here, because the big move in the markets yesterday was the German DAX, and that's a market that's also is in a downtrend. It's in a strong rally, of course. Maybe it's not in a downtrend anymore, I'm not sure. But if you'll take a look from the highs we made back in March in the DAX, it's formed a nice sloping trend line to the downside. We hit 261% retracements, and then the one that happened this morning with the DAX came in at the 707, which is a reciprocal of square root of 2, but it's very, very close to the 61% retracement. But the trend line is still there, and it is pointing to the downside. Folks, all I'm looking at when I look at this, and I have to say that I've been doing this for a long time, and I cannot see a chart that's any better than the one that I've been talking about for several weeks in here, months probably. I don't know, maybe it's been longer than that, I don't know. But that's this New York Stock Exchange chart, and that's telling us that something really big is about to happen to the downside. If we go below the lows that we made on November the 16th, which was the when we opened sharply lower Sunday night, when we got down to 1993 in the S&P futures, we get below that, then we're going to start accelerating rapidly to the downside, in my opinion. So we'll just see if that does occur, and then you can put your selling shoes on. But until that time, you really can't. It's hard to build a bearish case, given the fact that the market has been so strong, even though it's rallied up into all these numbers. But it's pretty tough. So you just got to wait and see. We are seeing a potential in a bottom in copper that I mentioned before. I think that's a real interesting one. Now, the VIX index is not giving any indication there's any fear at all in the market. It's just basically, everybody's just willing to go in and buy whatever they want, and that's about it. The question we're having on the Den is about the crude oil, and if crude oil, let's just put the chart up on crude oil again. I wanted to show you because this is some interesting cycle work that's here too. Because when we look at this, you'll notice that that you'll see the two triangles on the bottom there. You'll see true right-sided triangles, and it shows the number of days down from the high to the low as 12 in the first leg down. That's the AB leg. And if you look at the CD leg, that's also 12 days down. That was yesterday, and we did make a slightly lower low than we did on the 16th. And we also made a slightly lower low today by another 3 pips. Now, this is either major support or it's getting ready to go down, more. And you have to go with the figure that it's probably going to go lower because of the fact that the trend is down so much. But if it starts to hold here, this is where you'd want to be looking to buy the crude oil after you get a little bit of a rally up above the 42.70 level. Let it rally about 5%, and then buy that first little pullback. If you wanted to buy it here, the risk here is really small. You put your order in, and you buy it around the the 40.20 level. I think that's pretty much where it's trading right now. Let's see, where are we at? We're 40.26 right now. So you wouldn't have to risk more than about 80 pips on that. So you'd put your stop down around the 39.40 level, and that means it's got to go down and take out all those lows, significantly, and then you've got a spot, to take a really good look at it from the from the long side. So this is a very low risk in crude oil at this point, from my opinion. But remember, it hasn't turned yet, but it's getting ready. Just like copper hasn't turned yet. And then we'll see, because copper has got to hold this low of around 206. That's the 786. That's the butterfly bottom. Everything is there, and breaking 206, and the low today so far has been 205.90. Would tell us that you're probably going to go down to the 203 level in copper. And here again, the distance between 206 and 203, 3 cents in copper is $750. You don't need to risk that much. You only have to risk about a penny and a half in copper here, which would be at around $370 per contract if you're going to do that. We see no reason to be buying either the gold or the silver as yet. We've just discussed the gold market, I think, in pretty good depth here. The price of gold still has a price objective out there of this swing down at 1050. That's still above the low that we made 6 months ago at 1030. And from that level, we rallied over $170 an ounce, still in a bear market. And then all of the rallies since that time were perfect Fibonacci retracements off of that $170 move. We had $120, which is 61% of it, and we had two rallies of $70 each, 382s, and then we had one at $100, which was 707 of that. So they're all lining up, but they just haven't bottomed as of yet. So that's the key to watch. Now, I'm going to bring out a chart that we have seen before, but I want to bring it to you again to show you where we are a little bit. This is the long-term chart, the monthly chart of the New York Stock Exchange Index. It shows the 1, 2, 3, 4, 5 expanding triangle pattern. But the important thing about this reverse point wave symmetrical triangle is the time between point 1 and point 3 is equal to the time between point 3 and point 5 within 5 days. I mean, that's a pretty accurate thinking when you're looking at thousands of days in here. That's a really good spot-on move. And now what we're seeing, of course, as you can see from the chart, that we're made a 61% retracement of this move, much like we did in 2007. If you look see how point 3 has hit. We came down and rallied up one more time before going lower. This is suggesting that, well, if this chart is right, folks, we're looking at something really serious. This might be a preliminary that maybe Hillary's going to be elected. I don't know. We'll have to wait and see, won't we? Okay. That's so we covered the DAX, the IBB, we've covered Norman, we've covered the VIX, the Japanese yen. I want to bring the gold up one more time because we've had a question about the price of gold. And we'll bring this up here and we'll take a look at this. And you'll see that the objective that I'm looking at here in this ABCD move that we had from the 1192 level, that comes down to the 1050 level. See, gold had a really chance, folks. If it could have popped above the $1,200 level and exceeded that ABCD move, then it had a really good chance of being in a good move. But once it rolled over, there was no reason to be bullish on the gold and silver at that time. As far as the open interest is shown, we've had very little increases or decreases in the open interest at all, and so you haven't seen anything to make it think that it was going to be, a very good move, at any time. So that's about it. But we got a lot of things that are really in contention here for buys. We got a potential here in crude oil. You got a potential here in copper, and you also have one in the what's the last one? I can't remember the last one. Well, it'll come to me in a minute, so we'll watch it. So, I've had a request to put the chart of that Norm Winsky forwarded to me. This is the S&P on a 15-minute chart, and you'll put this up and you'll be able to see. Hold it. I hope I'll be able to pull it up. Let's just get up. There we go. Not yet. Boy, I have a difficult time with these charts. Okay, this is just a 15-minute chart. What he was expressing in his in his letter was the fact that these channels that are here, if you'll notice that the high last night in the S&P futures came in at 2089 and a quarter, and that's spot on to what we were looking at on this chart right here. And what Norman was saying is this could be the head and shoulders pattern that takes you below the low that we made on Friday night. So we want to watch that rather closely to see if that's going to be not Friday night, it was Sunday morning, at Sunday evening at the 1993 level. That would really be we'd have to put a feather in Norman's cap and just dub him Robin Hood if this forecast turns out right, because the whole world is looking for stocks to go a lot higher. This is a really key time because we've had the 3-day rally that we were expecting. It went a lot farther in the NASDAQ and the S&P and the Dow than I thought that it could. But remember, when you're looking at that, you're only looking at about 150 stocks. You're not looking at all the stocks. Like the New York Stock Exchange Index has not made the 61% retracement of that move as of yet. We can put that into the room here and let you folks see that it's still quite a ways away, even though we did get up into that 10,400 level yesterday. We need to get to almost 10,450 in order to get this index to the 61% retracement, which we certainly could, but that has not happened as of yet. All right, let me see. How many questions? We have 877-927-6648. If we have any questions coming in, we've covered gold, silver. What is the Gartley target in what? Tom or Trader Town, tell me what are we looking at? The Gartley target is on the SPY. Oh, that would take you down to 1910 is what it would take you. The low was 1993. And we rallied 90 points, almost 100 points off the bottom. So all you have to do is take 1993, subtract 100, and that takes you to 1893. And remember, the old low was 1831, so that would be a 78% retracement of that. Folks, when we take 1831 out, and it's not a question of if, it's when, we are going to be in something like what we had in 2008, only it's not going to be as pretty this time because of quantitative easing. That's the canary in the gold mine, folks. So this is a giant experiment that they've done, and I know you have all these Fed chairmen coming on, speaking all the time. You got one from Minneapolis, and we got another one from Dallas, and another one from St. Louis, I believe. All of them are, speaking and talking, and what they're doing is they're trying to jawbone the fact that there's going to be an increase in rates on December, sometime in December. It's a 62% chance of that happening, but this is, it doesn't mean anything because bonds have been telling you that these things have been that rates have been going higher for quite some time. The problem is if you're trying to buy a house now, it's not like it was in 2007 and 2008. You had one requirement to be able to buy a house in 2007 and 2008. Does anybody want to guess what that was? Yes, a heartbeat. If you had a heartbeat, you could get a mortgage. There's no question about it. In 2007, I don't know where they even had breath involved in that. But if you had a heartbeat, you were able to get a mortgage. So, this is not like that anymore. Now you have to put down 30-40%. And rates, I think rates on the 30-year around just under 4, I believe. But when you stop and think where they were in 1982, and one of the things I want to do, I'm getting ready to do something, do a program, and I found one of my old charts from August of 1982, and oh my gosh, you talk about an absolute beautiful pattern. It's a perfect 3 drive to a pattern, bottom pattern. But it's great. We're going to take a little break here. We'll wind up the show. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU, or LABD. Directions Daily S&P Biotech 3 times Bull and Bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, Larry Pesavento from the offices of Duke & Duke in Philadelphia, Pennsylvania. If you're ever in Philadelphia, go to the Wells Fargo on 600 South Broad Street, and you will be in the offices of Duke & Duke, because that's where it was filmed. Folks, it boils down to this. If we close really strong today, plus 70 in the Dow, plus 10 or so in the S&P, plus 30 or so in the NASDAQ, we're probably going to go a lot higher. That's would be my guess. What the reasoning before it, I don't know, because the technical picture would be much cloudier than it was last Friday when we were, setting on the lows. We've had the really strong rally now for 3 days. We're over a major cycle point, which was the 17th or 18th, and of course we're into the 19th now. And this was a longer term cycle, so it could be off by one day at the most, but not 2 days. So if it's really strong today, that would be a sign that we're most probably going to, work ourselves higher. We got the Dow up about 5 right now. The S&Ps are up about 3, and the Nasdaq is up about 10. So if we have the S&Ps up 10, the Dow up about 60, and the Nasdaq up about 30, that would be telling us that we're breaking out on the upside here, and could be caused by anything. I don't know the reasoning behind it, but that's the bottom line. It's just one of those things that sometimes these patterns fail, and when they do, you can't really you can't stand in front of it. So this is the what do you call it, the circling of the wagons, the last stand. So if today is really strong, then we're probably going to go quite a bit higher, would be my guess. I don't know if that's going to happen or not, but you have to be prepared for it and wait and see. The New York Stock Exchange Index is certainly not telling us that that's going to happen, but that's just an index of several thousand. But what people are trading are those 150 stocks that are making these things move, and that's what you can't stand in front of. Just like on the way down, you got to be careful being a buyer, and on the way up, you got to be careful being a seller. That's the bottom line of what we're looking at here. So live every day in an attitude of gratitude, and may God bless. And this was the ending music of Trading Places when lobster or crab, Luigi, let's have a both. Have a great day, folks. Live every day in an attitude of gratitude, and do something good for someone who has a lot less than you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.